Yo, what's up you guys? Welcome back to another video. And today we are going to do a weekly breakdown. Take a look at the market from both a technical and a fundamental perspective. So without any further ado, let's get straight into it. Now, before I continue, I want to inform you guys that these breakdowns will be sent into my Telegram group, right? It's a free Telegram group with an open community. So every Sunday I'm going to try, because at the moment as we speak, my power has been off since Thursday, right? So if the power allows me, if as next voorvalle, like they would say, if nothing happens, then I will publish this every Sunday in my in my Telegram group, right? I will leave a link in the description box below. Everything's free. There's an open community to talk where you can talk in as well. Just don't come with any expectations, okay? So yeah, guys, let's just get straight into it. So the only data I do want to speak about last week that came through was the unemployment rate and the positive jobs report, the average hourly earnings that dropped, right? But the most important one over here is the unemployment rate, which actually increased from 3.7% up to 3.9%. This is obviously giving us an indication about the impact that the interest rate has on the economy of the US. As we can see, a lot of more companies are letting a lot of people go. Now, there's companies that I know of that I've been following on Twitter or X, or that I've gotten some updates where people are being let go, right? But that is the negative impact. Now, if you've never watched any of the fundamental videos that I did, I would suggest you go and watch it. You will understand exactly what impact a a high unemployment rate does to a economy. It's not good. It's not good. So the Feds, again, we have the CPI data, which is what I wanted to speak about. We've got the CPI data that's coming through. Am I confused now? There we go. Okay, so we are now the 10th of March. So Tuesday we've got the CPI data coming through. Again, it would be good to see what type of data we get here. Remember, a higher CPI reading means a stronger dollar. A weaker CPI reading means a weaker dollar. And a higher CPI also indicates a potential increase of interest rates. A lower just means the opposite there as well. Now the dollar index has just completed this head and shoulders pattern, as you can see over there. If you've watched the previous breakdown that I did, market printed this head and shoulders pattern, then dropped all the way to go and fill in that gap over there, right? The market now broke below this level of support, and once support gets broken, it becomes a resistance. And this is basically where we would like to see the market pull back to over here, right? So this level over here acted as a level of resistance, broke above that, tested as support, broke below support. All of that supports now once again turned resistance. It's very important that we keep in mind that we do have a structure that we are faced with here to the left as well, that the market is currently trading at. So I would say that if we do get a clear break above this, a daily close above this, then we can definitely expect this market to continue higher. Again, it's important that you have to wait for the CPI data that is released on Tuesday, which will give you a further indication as well. As it stands now, I'm bullish on the index short term because I've got a sell on GBP USD also. So yeah, so that's just my 2 cents. In any case, the Nasdaq again stuck in this consolidation. Beautiful price action over here. We can see the market came into this. We can see the market came into this range over here at Friday 2 weeks ago, and we basically just been moving in there. Again, what do I expect on here? Let me just have a look at the weekly time frame very quickly. You can see on the weekly time frame, you know, we're still trading in bullish territory, right? We're trading above resistance, so there's easily a move to the upside, but we still have to come down and fill in this this move over here, where the market had broken above resistance, never came back to test it as support. So let's go back over here onto the daily time frame, right? So here on the daily time frame, we can see, firstly, if we are going to look for any short-term opportunities here to the downside potentially, then it's clear that we do need a break below this level of support, come back, test it as resistance before a continuation to the downside. In doing so, will the market print what is known as a information. Now, an information is considered a bearish pattern from a technical perspective. I see how I can wrap these things out already, you know, can wrap it out. That is why I say if you guys go through all of the educational content that I've done this for the past years, you'd be able to do the exact same thing, because it's all about reading and understanding market structure. That's it. You just need to read the structure and understand fundamental information, right? Alternatively, we could see the market just go back and continue this range. But again, I would love to see what happens with the CPI, and this will give us that breakthrough that we are looking for on there. Next up, we've got the Dow Jones. The Dow Jones also just completed an information to the neckline, as you can see over here. We had that level of resistance, got broken, tested as support, market broke below support, tested it as resistance, printed it information, back to the neckline. From here, I do expect to move to the downside, right? But again, on the weekly, we are still bullish. So I would still advise you guys to if you are looking to trade this, to be very careful, because on the weekly, you will see that we are trading above resistance, right? So what I would do is, although I don't trade as much as many people do, what I would do is, if I was looking to trade this market in the long term, I would just wait for the CPI data to be released on Tuesday, right? And then basically get into this market. Gold reached an all-time high. We can see we broke right above pandemic levels over there. This market is due for a heavy correction. The thing is, how do we determine that correction? We can clearly see that on the weekly time frame, we did break above previous resistance, and we are waiting for a return to take place. Right now, if I take my Fibonacci from the low to the high of this impulse over there, got a 61.8 Fibonacci lining up perfectly with this structure, right? So as we can see over here, we do have some, a nice move to the downside. And if we take this from that there, then again, I would say that this is probably not going to happen all in one go, but I would love to see the market pull back to at least 0.382 of the Fibonacci taken from the low to the high of this impulse, right? That's it, guys. Please let me know your thoughts in the comment section below, what it is that you will be trading, and the winner for the Ballon d'Or, I'm probably gonna have to do on Tuesday or tomorrow, or whenever my power is restored again, because the only way I was able to provide this video to you guys today is because I had my laptop charged and my router charged. Other than that, if Eskom doesn't sort me out tomorrow, then I will have to do it on Tuesday. I haven't played GTA for the last 5 days. Wow, sad. Any case, thank you for your time. Have a good weekend. Have a good Sunday. And as always, cheers, videos.